on. Okay. We are streaming audio. What's up, everybody? Just waiting for a few more people to get in here. We are streaming audio.
Hold on.
What's up, everybody? Just waiting for a few more people to get in here.
You gotta put volume off on this. Okay. Yeah. So, Greg, in conclusion, I hope you guys enjoyed our webinar. Okay. Yeah, so people's gonna be taking a big old swig of soda here in a sec. Yeah, we're gonna give it like 2 more minutes and we'll get fired up, and then we'll this is the Diet Coke before the California soda tax takes over. Okay. All right. Hey, Phil, I was thinking, and you guys put in the chat what you guys want to do. Phil and I are probably a little tired because we've been trading almost all night here with all the crazy stuff going on in the market here with the Fed doing their releasing their minutes, which we always see that to sell the news event. They kind of surprised us all a little bit by one last gasp last night, and that gasp turned into a perfect shorting opportunity. And so I got actually stopped out, and then about 2 this morning I rolled back and took a peek, and when they weren't able to bounce it up, sorry, timing's always perfect. So at 2:30 in the morning my time, usually you get a bounce out of the European sell-off when it opens, and it didn't bounce. And then I posted, you guys could put this in your trade journals, but at if it's 3:30 or 4:30 in the morning, my time, and I'm Pacific time, and you get a I'm so sorry, you get you don't get a move back to VWAP, and it's telling you it's a trend day down. And essentially that's what we had. They tried to lift it a couple times, and it really rolled over. So and I think it's probably Fridays are a little tricky, but if Friday we get a follow through down, then I think we can look for next week down even more. And I think those are the things we have to be careful on. But I was showing Phil before you guys got on, I was showing Phil a chart, and I'll bring it up here in a minute, that they've been using the basically on the ES. If you're looking at the 4-hour time frame, they've been bouncing this thing on the 30 EMA, or 30 EMA, and that 30 EMA has been used as kind of support, and they've been using it to get people wrong-footed and they ramp it back up again. Well, we hammered right on that at the close, so it's something we got to keep an eye on. And it's difficult to short going into a day where they can run it back to VWAP, because that there's still people trying to bid this market. And so what we have to do is now just kind of wait and see what happens. And for those who could stay overnight and they like the day trade, you look at midnight Pacific time to 1 a.m. Pacific time is to see and test the European Open. And that usually gives you a pretty good clue what the day is gonna unfold. So I just thought I'd share that with you. I'll show you the charts in a second. And the other thing too is that they took this opportunity to really whack gold down, $20 move down, and the miners. And what people are worried about now is that this could be a little bit of quantitative tightening that's showing up, but also that currencies around the world are really sick, and that the dollar is still strong. And what we need to see is, as the dollar gets stronger, is that gold stays strong with it, and then that move for the miners in gold that are consolidating now at near highs again get to lift to the next level. So those are things that we're watching. I think oil probably topped as well. And, looking at my charts, and I'll show you my charts in a second, is that there's literally nothing from a relative strength standpoint there is nothing undervalued right now, not a darn thing, and that should be worrisome if you're bullish the market. So um, so anyway, let me jump into my charts here. Phil, do you mind if I share my charts?
Yeah, let's switch over to that. Hang on one second. Let's do
Yeah, and I don't know if you want to add anything while we do that. So
um yeah, okay, so you're ready to share whenever. Yeah, I agree. Right now I think the Fed's kind of basically, it's kind of telling because they've kind of basically backed off, and so to me it's, I think they're more concerned, and I think basically the banks and stuff are still having their way where they're not, they try to take away the punch bowl and they just, every time they do it's like immediately there's big concerns. So, and then Trump also, he's he's really wanting the markets to be up, and so it's interesting. Powell met with him in the White House and all this other stuff. They blinked, right? And so I think we'll have some ups and downs, but I think ultimately, like if everyone's really bracing for a big rollover correction, I don't know that we're going to see that even this year. That's my opinion.
I agree with you. I think they're just gonna keep throwing money at this problem. People are really worried about us hyperinflating right now. It's going to be almost impossible because so much of the money goes into dead zones or to replace other debt that it's going to keep it from happening for a while. What we have to look and watch for is when is for gold to start moving with the dollar higher. Then we know the world's truly in trouble then. So,
Yeah.
but until then, they're going to keep this ball in the air. And Phil and I talked about. I think you and I talked about this morning. We were chatting. Is that the stock market's no longer just a financial tool. This is now actually a tool of national security.
Yeah, we were talking about that. Well, that came up. The Fed, you said, stock market stability is part of national security, and now it came up after '08. So.
Yep, I agree. So we have to keep that in mind now. In the past they would let this thing go, and now we have to take a deep breath, and we have to trade the market that we're seeing. And if it starts to really sell off, we know they truly lost control. But in the meantime, they can just keep throwing fiat units at these stocks and not worry at all. So let me so Iram, you said when one buys your products, do we get to keep them forever? We don't really sell any products anymore. We have subscriptions, so you get access to our tools, and so as long as you're a member, you can stay and have access to our chat room, our signals, or our software that we have on TradingView. And but beyond that, we don't really sell anything anymore because the stuff that we used to sell, people can just copy it and resell it themselves. So it kind of defeats the purpose. So we spend a lot of time and a lot of money and a lot of experience putting these things together. So, we like to keep them for people who actually pay for it for as long as they're paying for it. And the stuff we charge for, we think we know it's pretty cheap compared to what other people charge. So we think people get a pretty good value by being part of Trade Genius and our services. So I hope that helps you. But what I want to show you here first, I'm screening all the time, and this is what I call the complete view. These are all the major ETF sector categories, and I like to screen looking at the RSI first, and I'm interested in anything that's below 30 to see what is the possible next area of relative strength. Because we're in a market now that's rotating. And remember, the reason why I was buying UNG last week is right here, and I'll go into here too. Is that its relative strength was down in the low 20s, and this is when it was hitting 22.85, 23, and now it bounced, and now here it just crossed 24, into the close. So it's starting to get a move higher, and the lowest sector is a relative strength of 34, and this is food. And the food stocks are, let me see if I can get this thing on maximize here. Um, they don't move a whole lot. You know, this is one that if we start really getting into a harvest issue, you're going to want to own this. But yeah, so here's UNG, and you can see here, looking at it here, what I look for is that, you know, right now UNG is still in what would consider a, you know, a bear mode, but it's giving you bull opportunities to trade in. Every time you see these pops here, this is my algorithm telling me that, hey, pay attention to this trade, and that's what we bought. Okay, and then we got right back out again, and but it's moving higher. And one thing that I do too is if people that follow our trades, I set stops for your protection because a lot of people don't set stops at all, and it gets dangerous. But sometimes my stops are too tight, and so, you know, if you get our signals, you don't have to follow my stops. I do that for accountability purposes so that I can't just always come back later and say, yeah, I stayed in that trade, you know, even though it went down 40%, then it went up 300%, you know, so that's why I do it. But number two is to get people thinking it's okay, even if you get stopped out and it takes off on you, because there's a trade tomorrow, you know, and so you just take the next trade and you move on. But this thing is setting up for a move higher. And what I like to look for is I'll buy these shots, but they're just shots. So my stops stay pretty tight. But once it crosses over this moving average here, and these are volatility stop dots, when they go on the other side, then I get more interested and see if I can take a trade and run with it on a longer term basis. And make no mistake, UNG is going to have some really nice moves because of the what's happening with liquefied natural gas. The price they have to pay for it in Europe and Asia for natural gas is astounding. You know, they're paying minimum twice what we pay for nat gas, and we have it coming out of our ears. And essentially, it is free. They pump oil, natural gas comes with it. They used to burn it off. Now they have the capacity to get it to the Gulf, and then they used to burn it off there. And but now they have the capacity to basically liquefy it. And now we got this incredible export commodity that that is just a pure profit maker for these guys. So UNG is a good one for a longer term basis, but you know, beyond that, you know, nothing else is cheap. And so that's what has me a little bit worried right now in terms of looking at opportunities and thinking that maybe we're going to get go back into another round of selling. And if you look at SPY here, is we go 1 second. I'm locking up here a little bit, Phil. So is there any questions while listening? Here we go. All right. So typed it in too many times. Just bear with me 1 second, guys. But one thing here I'm going to watch with SPY, okay, I get back in, is that's what happens when you have 5 charting programs open, Zoom and Skype. So what I've been watching here is that we got turned back at this fib line. Okay, this was the next fib line to take us to the all-time highs up here. And so now we got to wait and see whether this is just another consolidation amongst a lot of consolidations and to push us to new highs, or is it going to break this area here and we're going to start beginning our descent low. We're at the top of the channel. Okay, there's a long-term channel, and but the moving averages, everything's squeezing everything to the top. So, you know, we have to be really careful that this thing may just turn and still blow higher, you know, like on China news or some sort of Trump news that's going to happen. And this right here, this is the market here. You know, if you bought you know, SPY here, where you bought SSO, where you bought, you know, long dated calls, you've been richly rewarded. But we're getting to a point now where you got to respect every one of these fib lines as a potential reversal area. And so, and then also on the flip side of that, what I was showing Phil is the this is ES here, is that on a 4 hour basis on the E-minis, is that what it's been doing is it's been turning on the 30 moving average here. Okay, it's been protecting the stock here, basically the entire month of February. And so we went ahead and we put a hammer in here. Now it just opened here again, and so we have to respect this until it fails, and start and making a new lower low. So if we could break down below this 740 area, I think Phil always talks about us coming back down to about down to this area was a gap area, but this is also another fib line. And then you break down from there, and then you start to cascade the other way. So I just wanted to kind of share that with you guys, and just I'll check some chat here. And if you guys have any questions on the stock stuff, I'll be happy to answer it. And if not, we'll flip on and we can talk binaries and we can talk crypto. And let's see here. Okay, so no questions, just people just talk commenting. All right, so Phil, we can flip on to if you want to talk cryptos a little bit, or do you guys want to I wonder if we should talk a couple minutes. Maybe I could put my screen up and you could kind of talk through, how we kind of chase some of these 3 minute moves for the binaries. Are you okay with that, Phil?
Oh yeah, that's fine.
All right. Let me do that real quick. It's pretty cool. And I'll leave ES up because it's memorialized, for so that's not really gonna move. So let me get it big enough here. And the only thing weird about this, Phil, is that you can't really tell from the moving averages. So we have to kind of look at some of this other stuff here. But you want to go ahead and chit chat on this, or do you think maybe might be too difficult because the linear regression lines have already moved?
Not really, because we tend to look at like the slow stoke, right? And when that's over, the classic setup is being oversold, and then when we get our moneymaker signal go long, and those two, the so if you look at the bottom three there that kind of formed around the bottom, that first one, my rule of thumb is on those first ones, when you get into a downtrend like we have, I kind of ignore the first one just because um, unless you get a rare V bottom, you usually takes a couple of attempts to slow the roll on a downtrend, even on ES these days. So because it's on a 3 minute chart. So the first one off a elongated down move. When I say that, I mean the faster moving average has gone down, and you've had several 3 minute bars like we had there come down. So that that first of those bottom three buy signals wasn't something I was interested in. And the other thing too is if we have any kind of levels that we're looking at, larger term, or a higher time frame or macro. So if we get a gap fill that's below or something like that, I will ignore everything until we see like that strong level. So levels will trump this. Let's say a buy signal if the buy signal fires a little earlier than what we think will be a stronger probability of a bounce lower. So the first one usually ignored. The second and third ones definitely were ones to take, and we do those on the touch brackets. And the reason why we like the touch brackets is there's usually a bracket that you can choose. They have varying widths, right, from a floor to a ceiling in price. So you can usually find one that's got a reasonable stop built in. So in binaries, usually the hardest thing about binaries is you can't set a stop. So touch brackets, you could say you entered one of those trades, and you could find a touch bracket that actually has a entry that's relatively, or it has at least a floor that's relatively close to one of those buy points. So let's say like the floor was 2760 on the touch bracket. That's a fairly close built-in stop, but enough room for the trade to execute. That way, if something happens and you can't attend to be at the screen, and let's just say something happens and you have to run out and the market moves against you, at least there's a stop there in place. So that's one reason why we like the touch brackets. The other reason why we like touch brackets is it's kind of a poor man's futures contract, so it's not as highly levered as the futures contract. And so you can get into the trade. You could lever it up like a futures contract by adding as many lots as you want. But right now, if you did one lot equals $10 for every point the ES moves. So it's a nice way to kind of get into that mode of learning how you would enter in a futures type trade. And then if you get good at that way, you can then start messing with actual futures. So it's a good stepping stone in that regard. But irregardless, you could make a living just doing touch bracket entries like how we outlined. The drawback to touch brackets, the only drawback really that I see is the fact that they have a 1 point spread. So before you see any green, you've got to have a move of 1 point in your favor from your entry. So you want to make sure that you're getting into setups that are probably looking at least like having a 3 point move expectation. But usually we do on these, and a lot more actually. We've hit some really big runs off these signals and overnight entries that Bob calls out, or we'll talk about in the room. So, but those set up almost every day, and we take a lot of those entries during the week.
Yeah, and the other thing too that Phil talked about too is we love these linear regression lines, and TradingView has it. Some other charting programs do not have as good as this, and to go against these linear regression lines is you're basically taking your profit in your own hands. So Phil and I were actually talking. Well, we obviously can't post every one of our trades in the room because we're moving fast, and it's really beyond the scope of what we offer, but we talk a lot of room trades for people that can follow the action. But this was a trade that actually touched the linear regression line because this is dynamic. And so I took this short and just went ahead and wrote it down. And then this hammer here that you see here is where the linear regression line actually was pierced. And I got off the trade because experience have told me that if I try to press my luck, that it'll result in a loss. And especially if you're trading touch brackets, you kind of come back and then it makes the trade almost like, okay, I didn't make hardly any money on the trade. And if you're trading futures, it's actually really real money. So in this case, it kind of bear flagged and then dropped again. And then it pushed down again into an oversold situation. And then also too, and I'll show you here, is these are things you have to know when you're trading the futures, is that you need to this is hourly. So let me go into the 5-minute here. Is that you need to let's see here. Oops, sorry. I don't want active trader. Let's see here. Sorry, let me turn this thing off if I can. Here we go. Okay, you need to know where the price volume areas are. Okay, and you need to know where the ST lines are, and it was pushing down. Okay, on TradingView, and it was pushing down on the VWAP. And so when it came down to here, you have to respect that this is probably going to get challenged for a move higher. And it did, but it failed. But when it failed, it didn't make a lower low. And this is where alarm bells should be going off if you're short the market. Towards the end of the day, last half hour, they like to run the home base, which is the black line. So you would have had a trade here. And if you did the touch bracket here, you're talking, it was like 63 or something like that. Let's just call it 64 for grins. It hit 75. So this is a $90 move here in 25 minutes on one contract. And that contract would have made you margin probably anywhere between $100 and $150. I mean, where else can you make double your max loss in a half hour? And that's why we like these things so much, and why they're better than futures. And for a lot of people, is if this thing started going up and then a nuclear bomb hit the White House, well, this thing could have went down from 2,700 to 1,400, and then you'd have been writing a $40,000 or $50,000 check to the exchange, even though you only had $6,000 in your margin of futures account. because you're responsible for the total loss. Here, you just got stopped out, and it's the market maker's problem for Nadex to figure out how they hedge that position with the exchange. So that's why we like these. And you know, it's quite possible if you're very disciplined with this, is to make triple digit, you know, money, you know, every day, but absolutely a couple $100 a week, if not more, on a consistent basis once you understand the rules and follow the signals, either the ones we share or the ones you develop by listening and watching us. So you're going to see more and more of this stuff. This is trading futures on training wheels. And Phil's put together some really cool things that he's developed for forex trading on binaries that applies very well to the ES markets, and we're starting to talk about some of those things, you know, in the room, and it's probably going to become something that we'll productize and get out to people where people can actually really amp their game and start making some real money by adopting the rules that Phil does so successfully in the forex market. So anyway, I don't see if anybody has any questions. Then we can flip over to crypto land.
Okay, so Casey, we can go over touch brackets a little bit here. I'll let me flip over to my chart. Hang on.
Can you take it from me?
Yeah, so you can flip back to your yeah, okay. Okay, so touch brackets. Now, so what
Yeah.
you do is over here you're going to click on touch brackets and you're going to go into indices, and this is where we spend most of our time, is on this US 500. So what you have are four different touch brackets at any given time, and you'll notice that they have different ranges. The bottom one goes from 2736 to 2786. Okay, so that's the widest bracket, and the rest of them get more narrow as you or actually I should say they move up. So if you're trading let's say you're trading the ES right now, it's at 2772, and you want to get long and you want a fairly tight stop, you can take this upper bracket, because what it's doing is it's basically got a floor of 2766. So that acts as your stop. When it touches either side of this bracket, the bracket closes and closes you out. So when you click, let's say we click on this trade here, right? We click on it, we click on the offer because we want to buy it. And down here, it basically shows you what your risk is. So you're risking, for one lot, you're risking $62, and the max profit on this is $438, because it could run all the way to 28.16, and if it does, you make $438. So you kind of get a gauge of what your max loss, max profit can be. A lot of times we're not in this unless we think we got a long-term good setup that we're going to hold maybe for many hours. But intraday, we're probably looking at just gaining like 3 or 4 points. So once you get into this touch bracket, and you can set a target, okay? You can set a target to get out, and you just set the level that you want to get out at. You just have to keep in mind that there is a point, about a point spread. It's actually less than that right now, this is actually a fairly tight spread for what's normal. But you want to deduct, usually if you, let's just say we wanted to get out at 27.75, then you actually want to deduct a point and make it 27.74 ish, and then that way more likely you'll get filled at your target. So but that's how you choose a bracket that you want. Any of these brackets will perform the same way, but if you want a built-in stop that's kind of close nearby where it would make sense to have a stop, then you just choose the bracket that makes the most sense to you. But you could even get in the wide bracket. It's just the stop obviously would be much lower. The max loss potential would be much lower because it's theoretical. But if you're sitting in front of it, it's going against you. You can just always punch out of the trade. So they're not very complicated. It's just they're different than the binary options per se. So I hope that answers your question.
Yeah, once you understand it, it's really straightforward, and you can actually develop strategies where you could be long a touch bracket, and you could be hedging with a binary option too. So it gets to the point where it just becomes a really good tool. And right now the leverage is 20% of of a futures contract. Like I said, like what Phil said, is a built-in stop to protect you from yourself. So and from unlimited loss.
Yeah,
So
I think they're a great tool to get into that type of trading. So um, don't be afraid of them. I think they're very low risk, especially when you're dealing with one contract. And if you're only letting a couple 3 points of room as far as a stop goes, you're only really probably realistically looking at $20-$30 of a loss if say the trade didn't go your way initially. So you're not, and like Bob said, there's really no, you're not dealing with the types of slippage risks that you would have with futures, which can be really costly. So on a fast moving market.
yeah, absolutely.
Okay,
So
so yeah, we can flip over to crypto. Let me do that real quick here, guys. Hang on.
when you go to crypto, I'll talk weekly. Weekly is like a daily DAFT, but it's just it expires Friday at the close, and so you just set your trade. The thing about the weeklies is that Monday, Tuesday, Wednesday, it probably doesn't move too much unless you got you caught a move that at the money that price had moved away from it. Then you'll see a difference in price, but it has wide spreads, and it doesn't move till you get closer to the end of the week. If you notice, Phil puts on weeklies a lot, but he doesn't do them mostly till like Wednesday, Thursday, and so that's how you use that. And people use those to as hedges as well. So you may be having you may put some options on in the real market, and you could be hedging them with binaries in Nadex. So there's all kinds of ways in which you can use the binary options to hedge or to amplify returns. Close Eastern time is 4:15 p.m. for the regular hours. Then it opens again at 4:30 to 5 p.m. and then it closes for an hour, and then it opens again at 1500, which is 6 p.m. 1500 my time, but 6 p.m. East Coast time, and then it runs all the way to the next day again. Okay, and I see Greg and Adam decided to use our webinar so they can Snapchat like two teenagers. So anyway, hey Phil, if you could show the first crypto chart Litecoin, because somebody was patiently waiting to talk about that.
Yeah, we can. Hang on a second here. My system's bogging a little bit, so bear with me. Litecoin. So Litecoin, you guys have, we said get in around $28, and we also said take some off. The only real risk on Litecoin at the moment, I think, would be the fact that Bitmain holds so many. They hold a ton, and but if they've stabilized themselves financially, then the risk of them having to dump for money flow purposes goes down a lot. But that is something you need to just bear in mind with that. So with Litecoin, here's basically this red mark is the halving event that it's having. Its halving event is a lot sooner than Bitcoin. Bitcoin's is May of 2020, and Litecoin is August. So because of that, halving events are the most bullish thing that is going to happen to Litecoin and Bitcoin, that just fundamentally drives these cycles. Because essentially what you're doing is you're cutting the inflation rate in half, right? So miners get rewarded half as much. They're mining for profit. That's half as many coins that are getting flipped over to the market. So always a very bullish type of effect. So Litecoin, I kind of outlined in the video we did yesterday, but outlined that this is probably a realistic move that we could expect to see in dollar terms. Bitcoin terms could be more muted, but in dollar terms, looking for a run up to it, and then I think it levels off, give or take around the time around this halving event. But uh, it levels off, I think. And then what happens here is Bitcoin's going to be making its march into its halving. And then I think Litecoin will have another resurgence with Bitcoin into that event. So lots of good upside potential for Litecoin. And Litecoin, again, big move up and then sell off. But the one thing you guys have to keep in mind though is on Litecoin is that a lot of the volume accumulation is in this area here. So we have a few chasms where or volume pockets, right? We cleared, this area here. Once you clear $35, then no surprise that it squirted up to where we are now. And that's this area here. Now we have a fairly decent volume node. So a lot of price action was accumulated in that area relative to the historical price of Litecoin. So we're hitting our head against that and could take a little bit of a breather back down. But I don't think this upside move is over yet by any stretch. Again, we got quite a ways to go till we get to that halving event. I do think we could peak out before it. That's happened in the past. And so, in fact, I think we have, yeah, we do. Let's do this. So Litecoin, so it's about 220 days out. It started making its run up. Did have a pullback event, but really took off ahead of that halving event. If we get a big spike up, I would be definitely taking profits. One thing about Litecoin is that on any big move, you really always want to be taking profits. It moves really intensely, but it also will pull back really intensely too. So you just any kind of big move on Litecoin, you want to be taking profits. Always an opportunity to get back into it. It's always given opportunities to get back into it. But you're sitting on a big move up on Litecoin, especially when it's a sharp move. It will grind higher, and that's different. But if you got a real parabolic type move, always take profit on it because it usually will take a long time to recover from such a move. So just bear that in mind. But this was the last halving event, and you can see how it ramped up about 32 weekly bars ahead of that. So that's kind of where we're at now. We actually were inside that. If you look here, our 32 bars was back in December, right? And so we're well within that area now where we can expect a decent rise up on it. So I think it's still, I don't know if I would buy exactly here unless if we broke higher, then I would buy a pullback over this 50 area or 60 area. I'd buy a pullback. But right here, I wouldn't buy into resistance. I would actually wait for a pullback. Not only do we have volume node there, but we also have just price action is dictating that we have. That's why I have that line there because that's kind of a support and resistance area. But if we got a pullback, let's say to 41, I think that would be, or 42, I think that would be a good spot to take a trade in anticipation is trying to run back up and then break through that resistance. Because the forces here are going to be pretty constant as far as going up into the halving event. So that's what I see on Litecoin. And we'll see if there's any other questions.
No, nothing else. There's no other crypto questions at the moment.
So Bitcoin, we'll cover that again. Again, we're in this is our latest blow off cycle that we're down to. Couldn't hold 6,000, broke through that. Because we broke through that quickly, you notice we have a big old volume void here. So if we do somehow break above this trend line, which is going to be pretty much an iron lid, you start breaking above this trend line, we could start talking about the bear market being over. But then that will probably lead to this volume void getting bought up, and then we'll probably run back into this trend line or this area here that was holding for so long. Okay. And don't be surprised if it rolls over there quite a bit, but that's how these bottoms will grind out and eke out. I'm 50-50 on whether or not this is the bottom or if we get one more low. I really think we're down to those two scenarios. I think the first order of business will be having to get above some weekly levels because we've never really made a higher high on the weeklies. Every time we put a high up, we don't break that previous high cycle. And so we may actually be in probably the best spot that we've been in quite a while, technically speaking, to do so. So the keys for me, and these are weekly bars that we're looking at, are going to be this weekly high and this weekly high. So, and we talked about that in the video, but that's really key, guys, to see it close above 42.40 approximately on Coinbase, and then again 44.15, let's call it. So those two levels are real key. Then after that, it's going to be this trend line. Trend line is going to be really key, and then we'll see what happens there. I think that trend line will also be another opportunity to short. You could see a head fake above it. That's not out of the question. Temporary short squeeze head fake and then dive back below it. But if we get above these levels here, especially above the 4,200 level, I think that's going to act as pretty good local support for another move higher. But that would change the structure, and that would put the probability of this being the bottom in. And the reason why I even think that is because there's just so many people that expect this to keep going lower and eke out another bottom. It is possible, but when you have so many people on that side of the trade, a lot of times the actual market will end up doing something different, because either it's just shorts get squeezed really hard because they're playing one side too much, and it fundamentally changes the technicals of the market structure, and then all of a sudden now everyone's looking at it in a bullish way, or just equilibrium just shifts over time. But that's my thought on that. As far as the immediate stuff too, you have to keep in mind the crypto fear and greed in a chart which we've looked at is actually really hasn't really set. So you can see we're actually right up into this area of resistance, and this is just based on previous price action, but came up into this level, and we're not doing a good job of really breaking through it. Volumes tapered off a little bit here, so we could pull back, and if we do pull back, then this 36.50 area I think would be probably a logical spot to look for a bounce. You could also see it may not get down there, and then the other area of interest would be around 37.70. So but I do think that if we do pull back to that level, I'm not really expecting like a big BART down. I think this move based on the volume has legs to it. And so I do think if it does pull back, I think it will attempt to get through that 4,200 level, but not on this first go around. I think we've topped out here a little bit.
Yeah, so, and then Bitcoin Cash, somebody had a request for it, Phil.
Ugh. Why?
Oh, I don't know.
No, we can look at it. If you can trade it, we'll look at it. Bitcoin Cash. Only reason why I would trade Bitcoin Cash is to get more Bitcoin, to be honest. So, BTC USD. I guess we'll look at Coinbase. The thing with this though, it can move decently when the problem is that they kind of coordinate the moves on this, to be quite honest. And I just don't know how much more gas they have in the tank on this. Yes, it's making higher highs on daily, but if we look at like the technicals on this, this is bottomed out. We're getting toppy on the technicals, so that doesn't really excite me a whole lot. Let's see, what does a slingshot say? So we got a slingshot sell there. So I'm not real bullish on it here against Bitcoin. Just chart wise and technicals, this isn't like the greatest spot. The spot would have been like as it was consolidating here, guys. Would have been to grab it at that point, because your technicals, you don't really want to buy when it's overbought. If anything, you want to buy when you're oversold. And so like here, you can see your technicals were bottoming out and crossing up, and you were consolidating. A lot of altcoins, you'll see this, they consolidate, and you get a nice move up out of that. And so that's the kind of action that you may not see any reason to get into the trade, but the technicals are lining up, and these things have been compressing. A lot of altcoins will compress and then move up. A lot of that is contingent on the alt market, which is in this chart here. So this is excluding Bitcoin, but is if the when the alt market goes sideways like it does periodically here, that's actually a good opportunity. You get a lot of different coins will pop. So you go over these consolidation patterns and then they pop. All right, so it's kind of like whack-a-mole, and there's not a whole lot of rhyme or reason to them other than I think the bots catch on, and then there's a move, and then you get a lot of automated trading on Binance and stuff like that that exasperates the move. So as long as you're not in a downfall event like was happening here, uh, and you're going sideways, then I think you have a lot of opportunities, which is what we've been seeing in the alt market. Overall, in the alt market, we've broken out of this descending wedge, kind of like Bitcoin has, a sideways breakout. But I think uh, I would be leery of alts as we approach this like 70 billion market cap level. And if it breaks through that, then the next area would be around that 84 billion market cap. So I still think there's upside to go in this, and all of this is contingent on Bitcoin not, dumping, because if it does, then everything else is going to go down with it. But I don't think that's really the current environment that we're in. I think we might have a short-term pullback on Bitcoin and some things. I don't think it's going to affect the alt market too well or too much, and then another move higher trying to bust through that 4,200. Maybe that's where we'll see this upper bound or this support resistance level on around the 68 billion mark in market cap get tested. That's pretty
And then
much.
there's a question on XLM.
XLM. Okay, let's take a look. Stellar Lumens. I'm just looking at the dailies. Thing about Stellar, you can have some pretty decent moves. Look at these big old volume voids. So you could get, and Stellar can move, but these big volume voids. If Stellar can maintain, I'd be looking. You could potentially easily run back up into this 2,900 area. I think that would be probably a logical spot, and Stellar has the means to do that. If we punch down to a smaller time frame, this 200 period moving average usually is always kind of the bugaboo on these. However, the way this is setting up chart wise, I actually do think this is somewhat bullish, and you'd have to have a fairly generous stop, I think, to start with on this. But one thing bullish here, let's do a horizontal line. You've cleared like this support resistance level, and that might be a little hard to see, but you've cleared that, and that's big. And so if that can, that's usually typically the way these things go, is that you'll clear a support resistance level. This one's not super clean, but you could draw one actually here too. So it's kind of resting on that. So yeah, it would make sense to me that if you were going to go long it, this isn't actually a bad spot on the 4-hour chart. It's consolidating above it, and so that's good. If it breaks down and closes below this line, then I would be a little suspect on the strength of that. Again, a lot of this all ties into like making sure Bitcoin, is not puking. But if all things being equal, I think this thing definitely probably attempts to get up and tag this 200 period moving average again. And that's not a bad trade. I mean, you're going from 2240-ish to 2384, so not a bad move. But there's a ton of upside if you can get past that level and this thing really starts to go. XLM does a really good job of trending, so I would keep an eye on it. And I actually wouldn't. I don't think I would be against an entry here at this point. Showing some legs, showing some strength, a lot of good volume on this move, break up above and then consolidating, and that's how these typically usually start to go. And then you'll get a really big explosive move up, and then everybody's paying attention to it. But like everything else, though, you want to take profits on a big explosive parabolic move up. They'll pull back, and there'll be plenty of opportunity to get in again on those. So,
yeah. And then shifting gears to binary, Michael, on the Forex side, we've been calling those trades out since actually we started the service, and it's unequivocal north of 90% win rate and just consistent growth in your portfolio. If you're trading the US 500, you know, the reason why people can't make money on it is sometimes people will trade too much or the wrong time of the day or get impatient. I think Nadex punishes impatience. You have to really wait for the setups. And that's one of the reasons why we did this thing with the moneymaker is that, you know, if you're new to binary options, my suggestion is only trade it from the long side and trade it when it's at the bottom of a channel. And you get a if you subscribe with us, you'd have access to the money making arrow, and then set it on the 3 minute and simply buy those arrows. And then Greg will tell you he's on the chat right now. He'll tell you that you make $15 or $20 per contract on a trade. You get out because, you know, an hour or 2 hours sometimes is an eternity, and the market can turn down on you. So a lot of people, for whatever reason, just wait till the expiration, and the trade goes against them in that time. If you're making 10, 15, $20 on a contract on a trade, you take your money and you wait for the next trade. And then that's how you build up over time. And the way you make money is to actually add contracts over time. So that's how it works. Forex there's a published approach that Phil calls out officially. In the US 500, we're still, you know, dabbling with ideas to formally put something together for trading US that aren't room trades or really obvious trades where people can consistently make money. And that's how we're showing people how to trade the touch trades. But also, you know, I take all those moneymaker up moves at the money and scalp. And, you know, you get, you know, 3-4 of those a day. And shorting it's harder, okay, because the market likes to go up over time, and sometimes the bottoms are really obvious, but the tops aren't always obvious. And so it takes a little bit more art and a little bit more experience. So I hope that helps you. You can consistently make money trading binary options, and you just have to, just like you're trading futures, you just have to follow really good sound discipline because it punishes you when you don't.
Yeah, I think you know, a lot of people will testify. They've made I had a lot of people contact me privately and say that, you know, they had a huge account growth doing our method, and you know, it's we got a couple different things that we do, but primarily it's our high probability stuff. And so you can, and it's the only way that you can really. The reason why people are leery of binary options is because it tempts you to risk a lot to make a little bit, and you think, oh, I'm gonna, you know, there's only a 40 minutes left, and I can make 15 bucks on this easy, right? And then, but you know, the market moves, and what you think you got plenty of room on, you don't. And so we've, you know, we know when the markets move, we know when they don't, we know where there's risks, and then we run probabilities on top of that. So where something, I've seen people start taking trades with us, and then they start doing their own thing, and they don't realize that, you know, that particular trade probably has a really low probability, even though it looks good. And so, and those things constantly, they're dynamic, so the probabilities constantly fluctuate. I spend a lot of time keeping my stuff up to date, and so, you know, but that's where you can get away with doing like deep in the money stuff. You know, you're risking $85 to make 15 per contract. Doesn't sound realistic or smart or even sustainable, but when the signal is 95+% accurate, then yeah, you're going to make a lot of money over time. Our current record is something, I think it's 136-8, because we just closed an official trade yesterday that was successful. So I mean, you're going to be hard pressed to find anything that does 138 wins and 6 losses in any of the markets, period. Forex, futures, whatever, commodities, just that's just not normal, right? But because of the way that we approach this, because of the systematic way that we do it, we're able to do that. There's not a lot of trades. There's not a ton of trades, because we have specific requirements for an official trade, because we know people are going to size up on those, and that's the money makers. So we don't. There's not a lot of them, and sometimes we go through periods where we don't have a lot, and sometimes we go through periods where we have a ton. In the interim, we also call out things that have lower probabilities, and sometimes they have really high probabilities, but because of either news events, risks, or just volatility in the market, or maybe the proximity of price and stuff, we won't call them official, but they still have really good odds. So we'll call them out as like room trades, and then you can take those. Maybe not as big of a size, but you can take those, and those are very successful as well. So we're probably one of the few places you could go and consistently make money over time. We have people that have been trading with us with binaries for over, a couple of years. And, I don't think you'd be hard pressed to find anybody in Nadex surviving that long on their own. There's just very few. I think the turnover rate on Nadex is 95%. So we have a definite niche, and we can make you successful at it if you follow the rules. And we get into all that once you get signed up and joined up and fill in all the blanks.
Yeah, and I come from a futures background, so there's actually trips and tips and tricks and this is where the touch is really going to help. I think it's going to help Nadex too, help people make more money. Is that because you don't have this options mentality and a time stamp that's draconian, where I'll tell people, and people that are listening on the right now or in the room, is that there's almost always a trade between 5 in the morning or 4:30 in the morning Pacific time to the market open. Now the trade may give you $5, $10, $20, but if you get 3 or 4 of those a day, you're making $100 a day. You're making $2,000 a month. You're making $25,000 a year. So these things add up, but there are just certain rules. And there's other times where Phil and I will just look at each other and laugh and say it's kind of suicidal to get in that trade because the chop will just absolutely eat you alive. And you don't know that because it looks like it's setting up, but we just know from probabilities that this is the hour that you'll lose money no matter what you do. And just because human nature will force you to act against your best interests. So knowing these things help you. So I hope we answered your question, Michael. So, and Tim got a good idea too. That's it. So you guys are pretty quiet. Anybody have any other questions? I'm gonna wrap this thing up. I'm tired. I'm getting a cold, I think, and we've been trading a long time, and then I still have to do a few little coaching sessions. But if you guys have a quick question, we'll catch it before we take off.
Going once, going twice.
Here we go. There you go, Darren.
There you go.
Yeah. So anyway, okay, guys. Well, listen. Thank you so much for listening. It was a good group. You guys were quiet though. Normally, you guys are yakkasauruses in the chat, so maybe we wore you guys out too. But we're gonna try to do this again in 2 weeks. So come back and bring questions. We kind of fill the air a little bit with some of the stuff we want to talk about, but we want to talk about the things that are important to you. So, bring your trade questions or your chart requests or whatever, and we'll be happy to address them. But thanks, Phil. Thanks for putting this up.
All right, guys. Thanks for watching. See you guys later. See you in the room. Bye. Love you too.